So good afternoon and welcome to another Sutton Coldfield Chamber of Commerce in Focus interview. My name's Chris Brewis and I head up the Chamber of Commerce in Sutton Coldfield. And we are joined by a lifelong Sutton resident, long-standing Chamber Exec Committee and Chamber Council member, Jackie Hendley, with us today. Good morning, Jackie.
Morning.
Good to see you. Really a quick intro to Jackie. Jackie has been a huge help to us personally in Sutton Coldfield, and lived in Sutton for her entire life and works as a chartered accountant and chartered tax advisor with over 35 years of experience across many regional firms. Set up her own business last year offering advice around accountancy and tax, and also works as a director at Wing Yip and a non-exec director at UHB, which includes Good Hope Hospital. So lots of sort of local connections. Jackie, it's great to have you here with us. And really this is continuing on a theme that we discussed in our committee meetings about the new tax year and obviously businesses looking into their finances as we move hopefully out of the pandemic. So really wanted to get straight into some of the areas that you work and you cover. You mentioned at the start you wanted to cover sort of around capital allowances and some interesting changes in that announced by the Chancellor recently. So give those members listening a bit of an update on that area, if you could.
Yeah, that's fine. So most of you will have seen the budget, but there was a few announcements in the budget which may be relevant to you. The first one was the announcement of a super deduction, whereby you can get 130% allowances for expenditure that's paid on plant machinery. That compares to what was previously 18% per annum on a reduced imbalance basis. So what that means is that if you incur expenditure between April 21 and March 23, which is qualifying, you would get 130%. So if you spent £1 million, you get a deduction for 1.3 million. If under the old rules, you'd get 180,000 in this year, and then that would carry on until you got to the million. So it's a cash flow advantage which was put there for companies. Equally in connection with that, for what's called special rate pool assets, which I won't go into the detail, but I'm happy to speak to anybody if they want to know. Historically, that was 6% per annum on a reduced imbalance basis. What the Chancellor said is you can get 50% deduction this year or within that period. Now, the idea of those was trying to try and encourage investment by companies. The other thing that he announced was that the accelerated investment allowance, which is basically the first £1 million of capital expenditure you incur up until during 2021, you can get 100% allowances on, so you can claim all of that. So whilst that might sound really good, the other area I'm just going to focus on quickly is the tax rate, because the current tax rate is 19%. So by accelerating these deductions, you get a deduction of 19%. Going forward, the tax rate is going to increase to 25%. So if you delayed your expenditure, you would get a bigger deduction because you get it at 25% rather than 19%. So it's not quite as straightforward as saying, let's pull our expenditure forward. Each company needs to look at what's relevant to them. They also need to look at the size of the profits, because if your profits are less than 50,000, you still remain at the 19%. So there's a number of complexities in there that need to be considered. And I think my one point of advice on that is don't assume that bring it all forward. Actually look at your cash flow and see what you want to do.
And don't take what's announced on full face value, because as always they're slightly more complicated than usual, and using someone like yourself who has that underlying knowledge. I think, as you say, I've spoken to many sort of accountants and tax advisors. We spoke with Henwood Court relatively recently, who are also members of our committee and work in the tax arena. And as you say, it's that awareness and that understanding of your business, isn't it? And having those figures. I suppose, have you found with the pandemic and with the current situation, businesses probably are at least more aware of what's happening, although planning, I suppose, is a little bit more difficult as we stand and as we move forward?
Yeah, I've been working with a lot of companies looking at their business plans, looking at their cash flows. There's a lot of businesses who I've been working with to restructure, mainly because they've looked at their business during the pandemic and said, actually, we can't carry on with the same business. So let's alter what we're doing And there's a lot of really good proactive businesses out there who have completely changed what they're doing. And so as a result of that, they're looking at introducing share schemes, they're looking at restructuring. Another area which is relevant is R&D. So they've been incurring a lot of innovation as to what they can do better. And that's an area that it constantly amazes me how many companies don't claim R&D tax credits, which is basically it's extra incentives that the government give you, either to reduce your corporation tax or to actually give you cash back. So again, it's a piece of advice is if you've been doing anything that maybe a slightly innovative, have a look to see whether you qualify on that basis.
Yeah, and I think that's again, that's something that comes up a lot, isn't it? Is that perhaps without realising it, businesses have had to obviously become more innovative, and if there's a cost there and there's some investment you've had to put in, yeah, looking at those claims and those tax credits is so important. I suppose, yeah, as we mentioned around those rates, it is about knowing the complexities of it. I suppose, what's your one piece of advice for a business? You mentioned around sort of profit and losses and those areas as well. Just what's one of your pieces of advice for a business who perhaps has started to look at capital expenditure? What would you suggest that they do?
I think it's what I said before, Chris, is actually stand back and say, when is the expenditure going to incur? And look at it not just from a tax perspective, but from a commercial perspective. I'm a strong believer that tax shouldn't drive the commercial, because actually if you do that, you can quite often end up in the wrong commercial place. But actually stand back and say, what's the commercial issue and how does tax impact that? And can we tweak it slightly to help from a tax side, but certainly look at it from a commercial side. And if a company's been suffering with losses during the pandemic, there is also a possibility to carry losses back for a longer period than normal. But again, there's the rate change difference. So I think my advice is that there's a lot of incentives out there, R&D, capital allowances, carrying the losses back, but don't assume that the headline position is the correct position. You've got to look at how it impacts your individual company.
Yeah, absolutely. And as always, get that advice, and also, yeah, look at it from your company, not just an example of a business that's done something really well that might not be in the same position.
Yeah, absolutely.
Okay, thank you, Jackie. It's been an absolute pleasure. It really is great to have your long-standing experience in this area, and I know, yeah, as a Suttonian, you're very keen to engage with local Sutton businesses, as everyone at the chamber is at the moment. And it's great to see you, and we will no doubt meet face to face sooner rather than later, fingers crossed, and have a wonderful rest of the afternoon. Absolutely. Thank you, Jackie. Pleasure.
Cheers. Bye-bye.